My name is Mikkel Rosenvold. I know some of you are Real Vision listeners, so you may know me from our shows, Macro Mondays and a couple of other shows. If you know me from there, you also know my usual sidekick, Andreas. He should have been here today, but unfortunately he fell ill, so that will have to be one for next time. Luckily, I see a lot of Andreas, and our thinking is very much alike, so we will hopefully we'll have some of the same points. It's been a long time since I was in Helsinki. It's really nice to be here. Are you all Finnish, local, or anyone from outside Finland? It's all Finnish. Oh, a couple of ones. That's good. Good. Usually, when we have a lot of hedge fund clients, when they ask me about the Ukrainian-Russian war, I always tell them, well, if you really want to understand Russia, you should ask a Finnish, because they fought the Russians. We haven't for a couple hundred years. So anyway, we'll try and go over a little bit about geopolitics today in the macro landscape. I'll try and give you a little primer into how we assess that and use that in our investment decisions and research and how we view the world. We'll also have plenty of time for questions. You can interrupt me with questions if you want, no problem. And yeah, let's get started. So yeah, as I said, my name is Mikkel. I started the research company together with my mate Andreas a couple of years ago. Now we've also opened a hedge fund that we're running, following much of the same strategy. I'm not going to talk a lot about that, but just to give you an idea of how we're implementing or taking account of geopolitics, is that in our hedge fund, we have a lot of data models assessing growth, inflation, liquidity. We try and use AI and computer and machine learning for that because it's much more objective. It removes all the gut feelings, all the emotions from the trading process. But then we obviously have a human decision layer. And that's where geopolitics come in, and politics in general. Because these past few weeks, actually last week, we had massive signals to go long oil. That makes sense. Oil was very cheap. We have a strong demand picture, especially out of the US. But when we discussed it, we decided, okay, we need to factor in geopolitics of OPEC, of Saudi Arabian decisions. That was a good thing. We avoided a big hit when oil prices took a bit of a hit last week. So that's one example of how we implement this. Another example of how politics play into this. So our data models, one of the factors that we use a lot is traffic data from major cities, including New York City. And so a couple of months back, you maybe know this, New York City implemented a payment ring or a traffic toll system around New York. So every time you drive in, you have to pay. That obviously led to a sharp decrease from one day to the next in the number of cars. And that caused our models to tell us that the US were in full meltdown recession mode. It obviously wasn't. We had to look a bit more into the data to understand that, and that's why we always keep a human decision layer. So that's just to give you some ideas of this. Now, when we talk about geopolitics and we try and understand it, how do we do that? Well, just a very, very quick, this is not going to be too theoretical, but just to give you some ideas of what we're talking about, and then we'll get onto some specific cases here. When we look at geopolitics, we try and gauge what's the effect going to be on markets. That very often involves, or most of the time involves, looking forward. And most of the geopolitical analysis you'll find out there will be looking backwards. This also means that I'm not going to be right 100% of the time. If I can be right 55%, that's very, very good. We can make money off that as long as it's looking ahead. So what do we look at? Well, I usually, when I assess a situation like India, Pakistan, or US, Iran, Israel-Gaza, I try to keep in mind two axes or this matrix. So whenever you have a situation like, let's take Israel-Gaza as an example. I know it's always contentious, but just view me as a cynic. I don't support anyone. I just try and look at it and try to understand how we can make money off it, essentially. You have two sides there. You have Israel and Hamas. The first thing I try to understand is, are they status quo players or are they revisionist players? Status quo players are usually players who are, they have the power, they're trying to keep things as they are. The revisionist players are the ones trying to change the playing game, or change the board game. Very obviously, in the Israel-Gaza conflict, Israel is the status quo player, and Hamas is the revisionist player. They're trying to change things, and that's always very important to keep in mind. Often very simple to see, but very important to keep in mind. Secondly, the other axis here. Are they playing a short game or a long game? Because that allows us to understand and sometimes also to predict the outcome of these situations. Let's take Israel-Gaza as well, because it's a very good example of this. Israel is playing the ultimate short game. Israel is a country that's focused on delivering security for its people today and tomorrow. They don't really care what goes on in 30 or 40, 50 years. We'll get to that at some point. But they need to provide security here and now. If they can't provide security, the prime minister is going to get thrown away and they're going to elect some other guy. So that's their game. It's the ultimate short game today. Hamas, on the other hand, they don't care about that. You can see that very clearly. They don't care about civilian casualties on their own side. All they care about is keeping their dream alive, so to speak. So that is the ultimate long game. As long as one Palestinian is alive and kicking, they can believe that they're winning. So that's why in this case you have two parties playing very, very different games. And if you're playing different games, if you're sitting at home with your wife and you're playing chess and she's playing Ludo or another game, you can both be winning. And that's what's happening sometimes. And that's something to keep in mind when addressing these situations. I'll get back to that. We'll get back to these specific examples as well. But let's try and dive into some situations here and how this affects global markets, because after all, that's why we're here. I often look towards the Geopolitical Risk Index by Matteo Iacovelli here. It's I don't always agree completely with it, but it's a good gauge of where we are. Geopolitical risk, of course, factors into a lot of, especially commodities and other markets. You often have risk premiums induced. So a high geopolitical risk means a lot for markets. I'll admit to that. I had the idea that when Trump gets into office, he has a lot of momentum. He has a very strong mandate. He was elected to end some wars. I actually believed, I had hope that he could bring down geopolitical risk, which I thought was the trend. It was also the trend just before he was elected. That some of these wars we saw across the world was going to end. I completely overestimated Trump, I have to admit to that. He didn't end any wars. He even started some new ones. And that's why we've seen the geopolitical risk actually rise significantly over the past months. So this is very, very significant. This is why oil prices have rebounded a little bit over the past weeks, despite Saudi Arabia flooding the markets with oil. And this is something to keep in mind in all your investments, because I suppose a lot of you are followers and fans of Raoul Pal. He's a great friend of mine. My version of his thesis, to put it very, very shortly, is this. If nothing is broken, you got to be long crypto and long tech. That's sort of a very, very simple way of what he's saying. But when something breaks and when something is broken, it's very often geopolitics. And that's why this is very, very important. We've seen that over the past 5, 7, 10 years, that geopolitics play a larger and larger role in defining the macro landscape. So we'll try and talk through some of the ongoing situations. Feel free to ask questions along the way and how they're affecting global macro. I'll also talk a little bit about crypto along the way. I know a lot of you have come for that, so obviously we'll get into crypto as well. So, Russia and Ukraine. It's a war that Trump promised he could end in 24 hours. How did that go wrong? What's the outlook and how is that going to affect global markets? Well, I think Trump completely underestimated the negotiation situation here. He went in with the idea that both parties were fundamentally ready to end the war. That's a logical conclusion. Most people like wars to end. He expected that, and he expected he just had to get Ukraine to the negotiating table, then everything will be fine. He completely underestimated Putin and misunderstood him, in my opinion, and that's a really, really bad preparation job for Trump. In my opinion, what's happened is that Putin has friend-zoned Trump, if you will. if you know that word. I know some of you guys know what that's like. And what's essentially happening is that Trump is, all the time he's hoping, he has this idea that Putin is just about to enter a peace deal. And every time he begins to get a little bit impatient with Putin, Putin gives him just a little bit, just enough to keep him interested. And it's been going on for 6 months now. Putin has been stalling everything. It's going to keep stalling over the summer. And at some point, Trump has to realize that he's being friend-zoned, and he has to stop texting her. That's the only way forward. And I'm still waiting for that. Obviously, the Ukraine war had huge implications on the macro landscape back when it broke out in 2022. As markets do, they relatively quickly adapted to this situation. The grain exports were managed, the oil situation. It's still worth looking after for two reasons. First of all, we know that Trump currently has, as part of this friend-zoning situation, he has on his desk a new sanctions package against Russia. The US haven't increased sanctions on Russia for 9 months, I think, because Putin has friend-zoned Trump. But he has a new sanctions package at the ready. They're just waiting for him to sign it, essentially. And that sanctions package could be very, very important for global macro. We don't know exactly what it entails, but we know that, or we expect that it has elements into energy. We expect it will be some level of secondary tariffs, so maybe tariffs on India because they are buying Russian oil. We expect there will be something on uranium. I know that's a bet a lot of people on Real Vision are interested in. The US is not buying a lot of uranium from Russia, but France is. I actually don't know where Finland buys its uranium, but probably also some of it in Russia, Kazakhstan. So that's another interesting bet. And most importantly, the US administration is very, very worried that the freezing of Russian assets has weakened the trust in the dollar and it's been a major factor in the growth or the rising gold prices we've seen. So they're very cautious about using that Russian money that they've frozen. But that might also be a part of it. If that happens, you're going to have regimes all over the globe saying, okay, well, if the US can simply just freeze all our assets, freeze all our dollar-based assets, should we then maybe you look beyond dollars? The first step, obviously, if you have that line of thought, if you're running a regime in Africa or Asia or Latin America, the first thought might be to buy gold. And that's what we've seen. Whether you're a president or whether you're just a business owner or a high net worth individual in China, it's logical to buy some physical gold. If you have it in your basement, the US Army is not going to come and take it. The second thing, and we're also seeing that, could be that governments turn to Bitcoin. I just read a statistic that, and obviously it's a bit easier to calculate these things within Bitcoin, that governments across the globe own 2% of the total, 2.5% almost of the global supply of Bitcoins. That's almost as much as they own in money terms. And that shows to me that governments have begun, some governments have begun directly buying Bitcoin. Major governments in the US, UK, other countries are beginning to say, okay, whenever we seize Bitcoin, we keep it. And that's a very, very significant development because governments are beginning to really value their seized Bitcoins. And it's a very natural step for all of them to also begin buying Bitcoins. So to me, that speaks very, very heavily into the Bitcoin case. And that could be a ramification of these potential sanctions on Russia. I remember 6 months ago or so on Real Vision, we had a show with a lot of American listeners, and I just mentioned Rheinmetall as a good trade. They were, oh, what's that? That's a whole new case for Americans for the past few months. I know a lot of you guys have probably been riding that train for a couple of years, but it's still a big case. To me, it's still very important to gauge when this war ends. Because right now, every European country is along spending more on defense. We're going to go to 5% probably in the upcoming NATO summit. I'll get back to that. But there is still a risk that when this war ends, are countries like Spain, Portugal, Italy, are they still going to be able or going to be willing to invest so much into the defense? We'll have to see. But so far I've been surprised every time by Rheinmetall. It just keeps going up as a direct consequence, obviously, of the Ukraine-Russia war. One final point here that the Ukraine war has provided for global markets. It has shifted the focus of defense manufacturing. We're used to, and we've done so in supporting Ukraine. In the West, we're used to buying very, very expensive weapon systems. We buy F-35 jets, we buy Leopard tanks, very expensive systems. You probably remember the debates about sending this stuff to, now Ukraine is getting Leopard tanks and they're going to roll over the Russians. Well, all that stuff we sent down there was blown out of the sky by the Russians. And it's coming to a point where both sides are very, very reluctant to use this expensive equipment because it's a big embarrassment when you lose it. So they end up storing it in a lot of facilities. They end up using it very, very defensively. And it's shifting the focus of militaries around the globe. Every military has observers in Ukraine watching what's going on. And they're shifting slowly but surely, they're shifting away from these expensive military systems to drones, unmanned systems, AI essentially. And that's a development you got to take very seriously if you're an investor. We know, again, pointing to the upcoming NATO summit, that NATO is going to discuss what we call ground-based air defense. So essentially a cannon that shoots down airplanes. It sounds very old-fashioned, doesn't sound very AI-like, but that's the trend right now. The Russians are very, very good at making that stuff. I know you're not going to be investing in Russian weapon stocks, I hope you're not, but the Europeans are going to be making a lot more of them, especially in Turkey and Sweden. So a lot of investment trends still to be pulled out of these wars, worth noting. Then there's China, the US-China relations. As I mentioned earlier, it's worth remembering who is the status quo partner and who is the revisionist player here. This is a good case to implement that as well. The US has been the global superpower for 70, 80 years and remains so. So the US is the very definition of a status quo player. The US wants to freeze the current situation, or perhaps the situation 10 years ago, and keep that forever, because they're dominant in all spaces almost. China, on the other hand, they're an upcoming power. They want to build power. So how does this vary? Well, the US has been trying for 80 years to maintain that power by building institutions. They build the UN, WTO, WHO, NATO, all those institutions, G7, what have you. And now the Chinese are trying to do the same. They're trying to build their own institutions. They're trying to decorate the global room in their way. They're building BRICS, they're building the Shanghai Cooperation Agency, they're building the Global South as a whole. So this is a very clear example of one point being status quo and the other point being revisionist. Now, what's happening right now, in my opinion, is that China is moving from being revisionist to being more status quo. Because China, they now have all the organizations that they domineer. They have control of the Global South. They have some power that they want to defend, and they have very, very poor demographics, so they're becoming more and more defensive in global matters, actually. That's why I think we will see some sort of trade deal between the US and China. It's probably going to be relatively small, because I don't think Trump has the stamina to keep negotiating for months here. But both sides are moving towards maintaining this current system. They're afraid of third-party players, and they don't want to rock the boat too much. The Chinese are also very afraid of internal struggles within China, losing their power. So they've done a good job of standing their ground against the US, but I think we are getting closer to some sort of trade deal. And that will mark the point where markets can finally forget this whole trade thing. I think, I just talked about that earlier, that many people try to think of tariffs as sort of a Trump phenomenon, that when he's gone, we're going to get rid of tariffs. I don't think so at all. I think the tariffs are somewhat popular in the American population, and once we find a level that is, if it's 10%, 15%, or if it's sector or whatever it is, markets are going to adjust to it, and then it's going to begin to bring in a little bit of money. for the US government. Not enough to solve the deficit, don't get me wrong, but it's going to begin to bring in a little bit of money. And once you have that cash flow into the government, it's going to be impossible for the next president to, even if it's a Democrat, even if it's, what's her name, AOC, could be the next president, they're not going to remove the tariffs. Also because if you think about tariffs, you could argue that it's a tax on multinational corporations who are preying upon the low-wage workers in Asia and selling the goods they produce there to high-income individuals in the US. So I think we have to accept that tariffs are here to stay. Probably that's okay for markets. As long as we get some continuity, get some stability, and this is the level, then the markets can adjust to that. Let me just skip through this. So let's talk a little bit about the Middle East here. I said, I know this is a touchy subject. I don't want to get into too much of this, but or into sort of the morals of this. I'm trying to be cynical here. So the Israel-Gaza conflict in itself is not necessarily driving global economy. Not very much trade comes from there. They're not big financial players, but it has ripple effects. First of all, obviously, you had the closure of the Red Sea trading routes. That's a massive event. You had 200 years where all the European trade from Asia had to go south of Africa. Then you had the Suez Canal, and now that's closed. And it's immense for countries like Egypt, but also for the Europeans. Adds pressure to our inflation levels, etc. So what does that tell us? It tells us that the US-backed trade system is losing its integrity. You probably know the memes where what's really backing the US dollar, and then you get a picture of 3 or 4 aircraft carriers. This is backing the US dollar. Yeah, but the US aircraft carriers, they haven't really been able to fix that situation. So this adds, in my opinion, heavily into the distrust and the entire debasement bet of what is really supporting the US dollar. And some of the players leveraging that is the UAE, the Gulf states. They're becoming centers of geopolitics now. And they're becoming centers of finance as well. But they're players in almost everything that takes place, both in Asia and Africa. And we have to adjust to that in Europe. We have to adjust to the fact that no one really cares what we think. It's much more important what they think in the UAE, because they're going to put up the numbers. I think it was very, we had it illustrated very well. When Trump went there, when Trump went to Dubai, he was like a fish in water. He loved that. He loved going to all these Gulf states because everywhere he went, they gave him a number. They gave him a number to show, I've come home with $1 trillion or $500 billion. Completely made up numbers of investments into the US. It's like, it's not going to materialize, but it was a good number. Every time Trump calls the EU, they don't put up any numbers. They put up some legal stuff. And he doesn't have time for that. He wants the numbers. And they provide that down here. And that goes for all countries. When you call the UAE, you either get some money or you get some weapons. And that's very, very useful for a lot of countries. So we have to get used to these very, very small countries becoming much more significant in geopolitics and driving a lot more financial power as well. It's very evident in the civil war in Sudan, where UAE are great players. So the Gaza conflict, it strengthens the power of the Gulf state. It also set the stage for US negotiations with Iran, which is a big factor in macro. I don't know if you remember this, but we've had over the past year and a half a couple of incidents of Israel and Iran throwing rockets at each other. And everyone starts to panic. Now we have a regional war coming. This is going to be the end of the world. And it usually never is. Well, there are several reasons to this, but it's always it always sends markets into chaos for half a day and a day. And that's something to take note of. Israel, as I mentioned, is a status quo power. They just want to stay alive. They want the people to stay alive. Iran used to be a revisionist power, but is now more of a status quo player because they are so fractured internally. When we think of Iran, we think they're all Iranians, but in fact, there are all kinds of ethnicities around Iran. And these guys all want their own states instead of being part of Iran. And that puts huge pressure on Iran, and that's why it makes a lot of sense to do a deal with Iran right now. And that's another prospect to keep in mind when you're following global macro and geopolitics, is that if we can get a deal done between the US and Iran, that potentially opens up for Iranian oil on the world market, it's very, very significant. It could drive oil prices down further. It could open up for Iranian exports, and it will lower the geopolitical risk immensely, because Iran and the relations with Iran are a main driver of the geopolitical risk that I talked about earlier. So another point really to follow, the Iranian conflict. Once again, the Trump administration have tried to do the right thing, in my opinion, but they haven't managed to do so. And that goes for a lot of, if we turn our attention to the US, it goes for everything that he's tried to do on the global stage. He hasn't managed to bring peace to Ukraine. He hasn't managed to bring peace to Gaza. He hasn't managed to bring peace to Sudan. He hasn't managed to do a deal with Iran. The whole trade conflict, I mean, he went into office. He spent the first 2 months, excuse my French, pissing in the mouth of all those Europeans, insulting us, provoking us. And then he goes on to have a trade war with China. I know Europe is not a very good ally militarily. We don't have as many airplanes and carriers that we should have. But in a trade war, Europe would be a damn good ally. But he threw that out of the window and then went into a trade war with China and didn't have the stamina to see through. So it's, for me, Donald Trump has disappointed a lot. I hoped he would bring down the geopolitical risk, but so far it absolutely hasn't been the case. So where does this leave the current macro situation? Well, I think we all had a scare around Liberation Day. We all had a scare around the whole tariff situation. In my opinion, that should be diffused by now. I think once we have a trade deal with China, that's gone as an issue. And as I said earlier, if nothing is broken, long crypto, long tech, in my opinion. I think we're going to have a great summer. I think we're going to have a great fall of 2025. I think I think it's very clear that the US administration has shifted its focus from the Doge project is out of the door. Elon Musk is very much out of the door right now. The whole attempt to generate income by tariffs, yes, they're bringing some income in, but not a lot. Very clearly now the focus is on outgrowing the deficit. So that means we're back to I think what was plan A, to fire on all cylinders, get the economy going and work out the deficit that way. Will that work? Well, we'll have to see. But I think that's very, very clear that this is the picture right now. And it should be positive for risk assets, should be very, very positive for crypto. Which brings me to my final line of argument here. I think the case for crypto is stronger than ever. And it's supported by various factors. For me, there are especially two things that support my view on crypto right now. One is that in the back of my head, I've been a crypto skeptic. In the back of my head, I've always had the fear that one day we wake up and it's all collapsed. I know that may be a little bit boomer-like take, but it's always been in the back of my head. What if this is not real? There's always been that tail risk, if you know what I mean. To me, that tail risk is gone now. Why is that? Well, because crypto has become too big to fail. It's not only Trump. Trump is obviously massively invested in crypto. His family is massively invested in crypto, but it's also the Democrats. All the backers, all the big institutions are getting more and more and more into crypto. And when that happens, when an asset is that heavily invested in by the political class, especially in the US, in my opinion, that pulls out a safety net under crypto. So if crypto starts to go south, if people start to lose the faith in crypto, there's a good chance that government is going to intervene. I know if you're a crypto fundamentalist, that's probably the worst thing you could say. But as an investor, for me, it removes that tail risk that crypto completely collapses. Crypto has simply become too big to fail. It's become government. The second point, I recently did a podcast in Denmark with the country managers of Visa, MasterCard, and the local Danish provider. We talked about payment systems and Apple Pay and mobile pay, etc., SWIP, what have you. And then I thought by the end, I'm going to catch them now. I have a question on crypto, and they're going to be completely unprepared for that. So I asked them, are you ready for crypto? And they were, I mean, these guys were 55, 60 years old, country managers, legacy companies. I thought that they were completely prepared. They were just waiting for governments to accept, and they were going to tokenize everything. So that demonstrated to me that even legacy companies like Visa, MasterCard, etc., they're completely ready to go all in on crypto, all in on tokenization. And if you have that entire business of payment systems, if you add that to the debasement argument for Bitcoin, if you have that entire business, I mean, we're talking $1 trillion business, those are two very, very solid bedrocks under the entire crypto space. I'm not an expert. I'm not going to tell you if it's Sui, Solana, ETH, what have you, but I think the overall underlying case under crypto is extremely strong, and that remains a big part of what we do and how I view the world. I think you're much further ahead in Finland here than we are in Denmark. I met with a family office earlier today. When I meet with family offices in Denmark, they don't touch crypto. They probably want to, but they're too afraid to. The family offices here seem much more open to it, so that's very, very positive. I think your government is also slightly more positive than ours in Denmark. So that remains my case. One final point on crypto here. One major use case that not very many people are talking about is the military. Because if you move away from major weapon systems like very expensive fighter jets to having potentially millions of drones, how are you going to keep track of all that? How are you going to keep track of supplies, of material management, all that? Very, very likely through the blockchain. And that is potentially a very, very huge use case for crypto as well, or for blockchain as well, that I haven't myself been aware of until recently. The US military is working very, very actively on this. They have moved some of their supply management to blockchain solutions, and I think that's going to increase massively. A lot of companies, especially here in Europe, are trying to pull home their data from the US, critical government data, military data. Once you do that, once you put it into a blockchain you can control yourself, that's a huge use case for crypto as well. So you're not going to find many negative arguments for me on crypto. I think geopolitics even support it. Countries are very, very eager to move away from the dollar to gain more independence over their financial assets. Countries are very eager to remove their dependence on US cloud and US data solutions. So all in all, I think geopolitics heavily supports the crypto case. So I'm not sure how my time is doing. Am I? Yeah, you can do a few Q&As. Great. So if you have any questions, please fire ahead. We have a bit of time for that before we go to the round table. I don't know if we have a microphone going around.
Any questions from the audience?
How many of you are invested in crypto? Maybe I should. Oh yeah, I thought so. You're not going to get that in Denmark, I have to say. It's
quite impressive.
Yeah, very much so. Very impressed by Finland so far.
All right, but then we can move straight into the panel.
Absolutely.
Oh, sorry.
Yeah.
Apologies.
Can you hear me?
Absolutely.
Thank you very much for your presentation. I really liked your revisionist and status quo framework, and with that in mind and focusing on Bitcoin and what so far has been done by the current administration in the US, what kind of a game do you think that they might be playing? We know that both Lutnick and Bessent are very pro-Bitcoin, and Trump as well. But what kind of a time frame and what kind of a game do you think that they aim to play with this in mind? Thanks.
I like to think anyway that the plan was to do a very, very short game on this and I think the Trump family is playing a very, very short game of I don't know if you would call that a rock pull they did, but that's the shortest game you can think of. So I think what's happened is that they've faced some opposition to doing a true Bitcoin reserve. It's probably tough for them to pull out $500 billion and put into that right now. Even though it might be a good idea to work the deficit as well. So I think the game is that they are, as many governments are doing, they're trying to accrue as many Bitcoins as they can through seizures and what have you. Or not that they're actively doing seizures, but when they are doing seizures from illegal sources, they're really going to keep them because it's going to be so important for them. And then I think long term they're awaiting. The long game here is that crypto is getting so institutionalized, and all these institutions are massively invested in politics. So it's becoming so interlinked that it's impossible to separate the one from the other. So in my opinion, the government, the US administration, they wanted to do a lot more, I think, on crypto. They found it very, very hard. But it's a matter of 1 or 2 administrations away, then we're going to have a true strategic Bitcoin reserve. I'm completely confident of that. And that's going to be a massive inflow and another massive backing of the Bitcoin case, especially.
All right, we have another question from here.
Yes, thank you very much. My question is about the stablecoin. So about 2 weeks ago, US passed the Genius Act, and in the same week, Hong Kong passed the Stablecoin Act. And last week, Circle went IPO. So it's about, what do you think how the world will be evolving next 6 months, let's say?
Yeah, I think very many, all governments are watching this. And I try to see how can we make legislation that supports this. Some governments are more willing than others. I think it's a difficult discussion because at some point it becomes an antithesis to crypto that is being government backed. And I'm very curious about that. But for now, I mean, every piece of legislation that supports this, it strengthens the safety net under crypto, in my opinion. The more governments are invested, the more political parties are invested, it strengthens the investment case because it lowers the risk of crypto completely collapsing, which still exists in many heads. So I think it's going to increase the inflows. It's going to possibly, I think, one thing I'm very curious about is how many EM countries, especially perhaps in Africa, are going to get involved in this. Because if they're going to get involved, it's probably via Tether or other solutions. So I know you have some great points on that, so we can get to it a little bit in the panel discussion as well. But it's, very good point.